Welcome back to our YouTube channel. Today we are going to learn about basic concepts of income tax. The audiobook which tells you the basic concepts of income tax. Coming to know about the taxes are considered to be the cost of living in a society levied by the government to meet the common welfare expenditure of the society. There are two kinds of taxes. Those are direct tax and indirect tax. Coming to know about the direct tax levied directly on the income or welfare of the person, and the burden of a same cannot be shifted. That means the person himself bears the burden. Income tax is progressive in nature. Learning about indirect tax levied on the price of goods or services, burden of same can be shifted. GST and custom duties regressive in nature. Why are tax levied? It serves as basic source of revenue to government for meeting expenses like defense, provision of education, healthcare, infrastructure facilities like roads, dams, etc. Power to levy taxes. Under Article 265, no tax shall be levied or collected except by authority of law. There are three kinds of lists. Those are union list, state list, concurrent list. Union list says that Parliament has the exclusive power to make laws, whereas state list says that the legislatures of any state has the exclusive power to make laws. And also in the concurrent list, both Parliament and state legislatures have power to make laws. Let's know about the income tax laws in India. Components of income tax laws. Income Tax Act 1961. This is extended to the whole of India. It came into force on 1st April 1962. There are sections from 1 to 298 and 14 schedules. The Finance Act is the amendments that are made every year. Income tax rules are the rules. Those are made by a CBDT, that is a Central Board of Direct Taxes, uh, for the purpose of clarification of the things that are bought. Let's know the differences between circulars and notifications. Circulars are issued to clarify the meaning and scope of certain provisions contained in the Act. Circulars are binding to assessing officer but not the assessee. However, assessee can take advantage of circulars whether beneficial to them. Coming to the notifications, these notifications are issued by central government or CBDT to give effect to the provisions of the Act or to make or amend rules for the purpose of Act, binding on both department and assessees. Levy of income tax. Income tax is a tax levied on total income of previous year of every person. For this, we have to follow 15 steps to get the proper income tax to be paid or the tax that we get as a refund. Step 1. Determination of residential status. Step 2. Classification of income under different heads, that are salaries, house property, business and profession, capital gains, other sources. Step 3 is computation of income under each head. Step 4 is clubbing of income of spouse, minor child, etc. Step 5, set off or carry forward of and set off of losses. Step 6, computation of gross total income. Step 7 is deductions from gross total income. Step 8, total income. Step 9, application of the rates of tax on the total income. Step 10 is surcharge or rebate under section 87A. Step 11, health and education cess on income tax. Step 12, AMT, alternate minimum tax. Step 13, examine whether to pay tax under the default regime or under 115 BAC, or pay tax under the optional tax regime as per the regular provisions of the Act. Step 14, advance tax and tax deducted at source. Step 15, tax payable or tax refundable. When we come to know the definition of person, it includes 7 kind of persons. Those are individual, HUF, that is Hindu undivided family, company, firm including LLP, association of persons, AOP, body of individuals, BOI, artificial judicial person, local authority, etc. There are special rates for tea, coffee, and rubber. Income from sale of rubber products derived from rubber plant grown by the seller in India. Agricultural income is 65% and business income is 35%. When coming to the coffee, grown and cured by the seller in India, 75% of agricultural income is taken from it, and 25% is considered as business income. Grown, cured, roasted, and grounded by the seller in India, 60% is considered to be agricultural income, and 40% is business income. Income from sale of tea grown and manufactured, 60% and 40% respectively as agricultural income and business income. As we came to know about in the definition of tax, the income is earned in previous year. We are going to pay the tax in this year, but there are certain cases when income of a previous year will be assessed in previous year itself. Those are shipping business of non-resident, income of a person living India with no intention of returning to India, AOP or BOI or artificial judicial person formed for a particular event or purpose likely to be dissolved in same year of formation, persons likely to transfer property to avoid tax, income of discontinued business or profession. In case of undisclosed sources of income, the rate of tax is 60% of tax plus 25% of surcharge plus 4% cess. That is total 78% of the amount will be considered as tax in case of undisclosed source of income. Coming to the slab rates of optional scheme, income earned up to 2.5 lakhs is nil. 2.5 lakhs to 5 lakhs is 5%, 5 lakhs to 10 lakhs is 20%, and any income earned above 10 lakhs is 30%. Coming to default regime, that is 115 BAC, up to 3 lakhs nil, 3 lakhs to 6 lakhs 5%, 6 lakhs to 9 lakhs 10%, 9 lakhs to 12 lakhs 15%, 12 lakhs to 15 lakhs 20%. Any income earned above 15 lakhs is 30%.